Okay, welcome to Financial Ninjas on Crypto. I bought my first crypto actually at a really opportune time, I have to say. I bought it when the market dropped in March, right after, with COVID, and then the stock market dropping and crypto dropped, and Bitcoin went down to like 5,000, and the other cryptocurrencies were, I think Ethereum was just a couple hundred. So I managed to buy a little bit then, and I was just like, I'm going to test it out and see what happens. And wow, since then it has had a very interesting journey. So we're going to talk about that. We're going to talk about is it too late? What is the market likely to do? How do you actually go and purchase, and where to go, how to hold it, what type of exchanges to use, some security precautions. And then we're also going to get into a few other things, which I think is going to be really helpful for you to wrap your mind around the whole concept of what it is, the things that were very helpful for me. So I've spent, I spent a lot of time looking at this in the past, but just even to prepare for this webinar, I've, been reading books and watching webinars and doing a bunch of stuff, getting on Clubhouse groups, asking questions of the experts in there to try to understand kind of the salient points that will help to help me understand kind of what it is I want to do and what could be useful for you. So let's get started. I'm going to share my screen. Okay, here we go. All right. So well, I should probably rename it, but let's go for our agenda here, which is what we're going to cover. All right, here we are. Okay, so this is what we're going to cover. To keep things simple for people who may not have a lot of time, I'm going to get right to how to buy it, how to hold it, like the specifics right up at front, okay? Then we're going to talk about what is cryptocurrency, like how a different way of thinking about it that I think will really help you understand it, because I think for a lot of people the concept is confusing, and the future of it, where it's going, the value of assets, and even for fun, a little bit about the astrology and the planets and what is going on kind of on a macro scale to understand where things potentially are going. So it should be interesting. Let's get started. First of all, of course, this is not financial advice. Always have to say that. Anybody who doesn't have themselves muted, please mute yourself. And feel free to, if you have any questions, feel free to type your questions in the chat. If you want to ask a question and you don't mind being on the video, you can unmute yourself and ask the question directly. All right, let's get going. So, buying crypto in the US, where can you buy crypto? A lot of people use Coinbase, but in talking to some of the people who do crypto all the time, they have a lot of things they don't like about Coinbase. And so I'll talk a little bit about why that is. I've heard recommendations to purchase on Swan Bitcoin. I just opened an account there. I haven't really used it, so I can't tell you that much about it. In the past, mostly I have purchased my crypto through Coinbase and then transferred it off, okay? Now, don't worry if this sounds confusing for you to start with, but for some people who just want to know where to go and get started, that's why I'm doing this bit right now, okay? Then we're going to get into really what the concept is and how to think about it and how it's going to be used and all of that stuff, okay? So, a few of the exchanges where you can purchase it, okay? So how do you go on and purchase it? Basically, in one of these places, Swan Bitcoin, Gemini, Coinbase, Cash App, you can create an account. Kraken, I think a lot of people in Europe use. If you are overseas, Binance is a good one as well. And if you want to pay cash and you, for instance, say you don't, so in all of these apps, there's going to be, when you open your account, You're going to open your account. You're going to have to verify your identity. It's KYC. So make sure you have a picture of the front and back of your driver's license. They're going to make you upload that. They may make you do like a live showing of your face on your phone through the app, and then to verify you are who you say you are, right? They want to make sure that the people signing up for accounts. So don't think you're going to open up an anonymous account on any of these, particularly not any of these platforms in the US, because of the regulation. They have to be really strict about the knowing who it is to prevent things like money laundering and stuff like that. Now, of course, once you purchase it, you can transfer it out into another account. But when you're opening up these accounts, you're going to connect them to your bank account. You can directly connect it to your bank account. So after you do the identity verification, they'll make you connect it to your bank account. And that way you'll be able to directly purchase on the exchange. Super simple. You click buy, you put in the amount of money you want to buy, and it purchases for you. If you like, I can even maybe show you the screen and show you how that works. But they're all going to work pretty much the same. Gemini, Coinbase, etc. You can even buy it on Bitcoin.com. All right. A lot of the people who do this a lot, they say that they don't like Coinbase because they think it has terrible customer support. PayPal, I really don't recommend. You can do it, but I don't recommend it. It's the hardest to get approval. It just wants all kinds of ridiculous stuff to verify you, like, your social security card and all kinds of things. And there are places where you can just Google it, where you can actually buy Bitcoin with cash. So if you wanted to walk in and buy Bitcoin with cash, you can do that too. That does exist here in the US. Anyway, that's kind of a brief rundown. I'll talk a little bit about in the next slide about, okay, holding crypto. Why is this important? What are some of the fears that people have? A lot of people are talking about, oh, well, you could be hacked and all your Bitcoin could be stolen and this and that and the other. Only if you don't hold it in the right way, okay? So a lot of people might hold their crypto on an exchange where they can get a high interest rate on it. So for instance, if you leave your crypto on Coinbase, then it will earn you interest. And there's a number of other platforms that is true of. It'll earn you a much higher interest than money in your bank account, maybe 5 to 7% interest. And that's another little trick, not using Coinbase, using another thing that I've told you guys about, which we can get into at some point. However, what is the risk? If you have a small amount, well, that might not be too risky, but remember, what's a small amount now could be a very, very big amount later. The issue that a lot of the crypto people have with Coinbase is they don't like its kind of its ethos. Okay, so and it's a similar issue to holding money in your bank account, right? So basically, they're saying, look, if it's on the exchange, you don't really own it because you don't got it right here, right? So somebody could do something to it. The exchange could shut down, or the exchange could limit how much you can transfer, or there's all different things that could come up, possibly. Unlikely, but still really a possibility. So nobody recommends holding large amounts on an exchange or even in an online wallet. So what's a wallet? Let's talk about some of this language. A wallet is basically like a bank account, right? It's basically like a bank account, but it's your own bank account. And what does a bank account do? In your bank account, you have numbers that show the digital amount of value in that account. So your wallet is basically like that. It's an account. You can transfer money into it. You can transfer money out of it. A hardware wallet is the safest place that you can put your crypto. Now, there's a number of hardware wallets out there, which they internally have cryptography. They have all kinds of security features, ones like Trezor, Ledger, right? These are kind of industry standards of these. They look like kind of like small little things like this. They maybe look like a USB drive or something. And they have all of the, I mean, I just ordered one from Treasure. They have all of the software on that, right? To encrypt it and to make sure that your private keys are not shared, right? So your private key is like the password to your bank account, which you never want to give somebody unless you want to give them access to all your money and let them take it. You see? So that's what a private key is. So a lot of the people in the industry, they say, not your keys, not your coins. Okay. Which means if you give your key away to anybody, they can just steal it. And if you are holding it on an exchange or somewhere else, right, then, you know, there is the possibility, like we discussed before, of stuff that could happen to it, because exchanges sometimes go down. There can be issues with internet connectivity, or the liquidity dries up and it can be hard to make transfers and exchange money. So that's kind of the issue there. I just want to make you aware of what's the difference between holding it on an exchange. So like leaving it when you buy it, just leaving it in Coinbase or leaving it in Gemini or somewhere like that, versus buying it and then buying yourself a hard wallet and then transferring that money into that wallet. Okay. Now, what is the risk of putting money on that little USB drive? Pretty sure you can think of them. The risk might be that you would lose it. Okay. But let's say you have a gold coin or maybe a gold bar or something like that. What do you do with it? You stick it in your safety deposit box, or you put it somewhere safe where you know you're not going to lose it. You don't just leave it laying around, right? And make sure, this has been a big issue, you know, where people pass away or something and they haven't given their key to whoever it is that needs to access that. So that's part of something to think about for like estate planning and so on. Okay. Let's look at some of the issues you need to really understand about security. These are going to be really, really key. Not just using a cold wallet like this, not just using a hardware wallet, but if you do leave it on the exchange, okay? Because I leave my money on the exchange to earn interest. And as the value of that grows, I may shift that behavior. I just bought a hardware wallet and I may move some of that into the hardware wallet. But in the past, I've been leaving it on the exchange so that I can make a high interest on it. Now, these are some security features that you need to be aware of whenever you do these types of transactions online, okay? This is how people steal your stuff. This is how you get hacked. Who here has used two-factor authentication with SMS? I'm sure all of you have used it, where, you know, they say, type in your phone number, we'll send you a text message to confirm your identity, and then you have to like take the code from the text message and type it back into that computer box. That's two-factor identification with SMS. One of the worst and most dangerous things that you can do. Why? There's something called a SIM swapping attack. And people don't realize how incredibly easy it is. Okay. Basically, what someone can do is they can copy the SIM card of your phone so that they get those text messages. And that then they can access all those accounts. You see? Now, how can somebody do that? You'd be shocked at how easy it is. I was on a webinar and they were talking about how basically, you know, if you ever worked for the phone company, like in a management role, a lot of times all those guys still, they don't change the passwords. So they can still access and log in to the systems. You walk down to a phone store, right? Like a Verizon store, a T-Mobile store, a Sprint store, or whatever. And you have all of these workers there who, you know, they may be having a hard time. You know, and basically you could pay them $150 and have them copy a SIM. Like, that's how easy it is. They can just do it right there. So when I say it's easy, it is easy. Okay. So be really, really careful about this. If you want to protect your crypto, which is your assets, don't use two-factor authentication with SIM. Okay. There's another way to use it, and that is called Google Authenticator or Authy. This is an app you can download on, there's more than one, right? But it's an app you download on your phone, and basically always save your key from this app. And instead, whenever it gives you the option to use two-factor authentication, don't use your cell phone. Use the app, okay? And basically what the app does is, so, oh, I don't have it on this phone. I have it on my other phone. Okay, well, basically what the app does is it will have a code, right? And that code only lasts a very short time. Let me see who is on, who is not muted. Not mute. Sure, you mute yourselves, everybody, please. And so basically what that does is it's going to give you a code, and that code changes every few seconds. Okay. So that way somebody else cannot get that code if they copy your SIM card. So this is super important. If you're going to start being an actor like this online, what is one of the issues of crypto? You have to be responsible. There is nobody to call and say, go, please fix this. Okay. You have to be responsible for your assets. But remember what we said, ownership responsibility is also freedom. So make sure that you get the Google Authenticator or Authy app on your phone and use that for all of the two-factor authentication on all of these types of stuff. Okay. Be sure your phone is not linked to your email, because that's another backdoor to get in. Okay. Now, you're going to want to open a new email account for all of this stuff. Proton Mail is a good one. It has there's certain email software, email account software that is designed for high security. Okay, Gmail is not. Google can read all of it, and most other things are not designed for that way primarily, right? Proton Mail, you can open a free account with them. Create your address, and you can start sending. And as you open each of these accounts, okay, you can send all of your emails for those accounts to that secure account. Okay. The next thing is when you open an account, when you open a wallet, it's going to give you something called a passphrase. And that's a series of words. This passphrase is your golden key. This is your password. This is your ticket. This is how you get into it. If you forget your password, this passphrase is how you open it up. So your password and your pass key, you want to write down on paper. Okay? Never type it into any device connected to the internet. This is very, very critical. Do not write it in your computer. Do not put it into LastPass. Do not put it into anything connected to the internet, which can be hacked. Okay? Only.
Appreciate it. Thanks, Ben.
Follow up, and I'm sure you'll come up with more questions. Okay. Well, nice to meet you. Yeah, likewise. Nice meeting you too.
All right, Ben. We'll be in touch, man.
You bet.
Thank you.
Have a good one.
Thanks, John. See you.
Please mute yourself. It's a guy. Is that Tony?
Sorry.
Okay. All right. So these are really the key stuff you need to know. Okay. For any of this crypto stuff, this is the key stuff you need to know. Don't use your SIM card. Get Authy. Use normal password in Authy, right? Just create a password and write it down on paper. Keep it on paper. Keep that paper in a safe place. And never put it onto your computer, okay? If anybody ever asks you for it, That is wrong. Nobody should ever ask you. That's how people do this. Okay. They send you the email. They pretend that they're the exchange, whatever that is. The exchange should never ask for it. Nobody should ask for it. Okay. There's a few more advanced security features that people talk about, which would be whitelisting certain addresses. So if you know that you're going to be moving money in and out to a particular account a lot, like then you can whitelist the address in your exchange so that you don't accidentally copy it out, or that someone doesn't actually accidentally do a swap of the address, right? So that's another sort of technique people can use. Another thing that people use who are really into this and doing a lot of it is, they use VPNs anytime they connect to the internet to protect that. So, whether or not you want to go that far, that's up to you. It depends on how much, money you're carrying in this, but at least do the basic stuff that I showed you first. All right. Let me see if anybody has any questions. Chat, are you going to offer recording? What about MetaMask? I just downloaded that. It's a wallet, but it seems you can also buy Ethereum from there. Okay, so MetaMask, a very good question. MetaMask is an example of an online wallet. Okay, and how do I put this? So MetaMask, so like if you have your money on the exchange, right? Then, can you say you really own it? Okay, it's in somebody else's thing. But if it's in an online wallet, yes, that's better, okay? Because that's in your separate wallet, but it can still be a little bit more susceptible to other types of attacks or things like that. So that would be the issue. I have MetaMask too, and it's useful to move money in and out. Some of these wallets you can actually purchase on them. Even your hardware wallets have the software oftentimes to actually make purchases. Okay. Now I've had people say, well, if you connect your hardware wallet to the internet, then that's going to be an issue and you're opening yourself up to being hacked. Talking to some of the crypto experts in Clubhouse, they were saying that actually that's not true. That the advanced hardware wallets have software there that prevents that, just as long as you don't give out your private key to anybody. So, you can kind of take that as it is. You can do more research on that if you want. Let's talk a little bit. So let's jump into this next thing, which is what is going on here? What is this whole thing, right? We're not going to spend a lot of time on this. It's going to be the very, very brief history of money. Okay. So money started basically, it was just a barter system, cattle, seashells, etc. The first coins didn't come around until around 500 to 700 BC. And what was the thing about the coins? They're made out of gold or silver or other metals. So the metal had an inherent value. You could melt it down and use it for something. And back then there wasn't that much of this metal. It was much harder to mine in the old processes they had. So in 300 BC, Rome minted coins and began to stamp them with gods and goddesses, right? If you have read the book Sapiens, a fascinating journey about the story of money and about how, who is that making noise? Who's unmuted? Please check and make sure you are muted, people. It's about the history. So basically what happened was they created these stories using gods that got people to adopt the money and that got people to be less inclined to, well, what's the word I'm thinking of, where they copy it illegally. But what Rome did before, when they first made, yes, exactly, counterfeit. So what Rome did when they first made money, what people did when they first made money is they would have a little chip in it, a little chisel, so you could see if the coin, the color of that money went through, like if it was a gold all the way through, or was it just dipped in gold, right? Because to a large extent, the value of it was based on the metal it was made out of. Then Rome standardized the value. It said this coin with this head of this Caesar is this much, and this coin with this head is the value is worth something else, right? So Rome also made a series of values with like gold, silver, and debased metals, similar to what we have today with the different types of coinage we have. But what happened once Rome standardized the value is then it was able to decrease the amount of metal in the coin until finally, it was just basically just dipped in silver. Because Rome's word, right, that this is worth this much was considered enough. What does that mean? It means the value just became made up. That's what that, so that this is the, even in the early days of money, so what happened there? Inflation resulted. Now, how are we feeling about inflation these days? So inflation resulted, and as the currency is debased, it becomes a form of taxation. All right, so we have inflation now. I mean, the official word is it's around 3% a year, which is actually huge. Okay, when you think about it, and when you actually factor it into these models for your money, but it has been much, much higher than that in history, and it certainly has the possibility to go much higher. Again, it's a form of taxation. It creates uncertainty and inhibits trade and wars, creates military instability, right, when this happens. So this happened in Rome, it happened in all these different empires, the Roman Empire, the Chinese Empire, the Byzantine Empire. Each time they would reform the coinage, and then they would go through a process of debasement, which is basically inflation, and then the currencies would fail, the empires would fail. So it's just a process that happened throughout history. Now, the value of having a single currency is that it enabled people to trade, but it also, because it was controlled by one source, it was easier to debase and to make the population poor and easier to control. In the Middle Ages, we first began to use something called a bill of exchange because people couldn't carry a whole truckload or a whole wagon load of gold. So they began to say with these sort of reputable money houses, right, which became banks, who would hold the money, and you could say, okay, I'm going to take this piece of paper, and you're going to give me this much over in this other country or city. Paper money was first used by the Chinese, but because it was too easy to counterfeit and to print, it became an issue with that, right? So the debasement, the inflation of the currency just got out of control and it failed. So the gold standard was used in 1800. This allowed the central banks of the world, this is where we really started to create more of a comprehensive monetary policy, right? It allowed all the central banks to say, okay, our money is backed by this precious metal, even though it's not in gold, right? And the US dollar was pegged to that. So for roughly 200 years, gold was used as the standard. And it was backed, the money or the paper money was considered backed by gold, right? In England, it started in 1700s. This is going to get very interesting later on when we talk a little bit about the astrology of money. I want you to remember what's going on here, okay? So, over 200 years ago was when the US first started using gold coins. So when all of these currencies were tied to gold, this became the closest we had to kind of a universal currency. But because of the wars and the depression and people needing more money and the value of their economy couldn't back that money, they needed to print more money. So the countries had to get off the gold standard. And now we see what that looks like, right? All the different currencies just fluctuate wildly against each other's value. Because now value is based on international supply and demand for a particular currency. So that means that if a country doesn't have a lot of natural resources, then or something like that the rest of the world wants, right? Then there's no demand for it. Then it makes it very hard for their citizens to establish wealth because their currency can't compete with the other currencies. All right, we're almost done with this history bit. But this is important to understand why crypto, okay? It's important to understand why people are into using crypto now. The fractional reserve banking is what all the banks use today. What does that mean? Means people are like, oh, but crypto doesn't really exist. It's not really a coin. Most of the money doesn't exist, right? It's all just numbers on a ledger. There's only about 10% of the current currency money that we have is actually in currency, right? It's called fiat money. Fiat money is the money that banks print, okay? That's, you know, backed by their country, their government, and the banks printed this physical money. So most of the money in the world doesn't exist as money. It's just numbers in a ledger. It's just electronic. Okay. It relies on everyone's belief in the system to uphold it. Now, why is this good? This is actually a good thing for an economy, because there's no way that a mint could print enough cash, and then where would you stick it all, right? So to allow an economy to keep growing without being restricted by a physical money supply, this is actually a great idea, right? While keeping up economic growth, you can't just keep printing tons of money. But we just need to recognize that this is the current state of affairs. And so what this isn't that big a shock, okay? Now, critiques of people say, people who criticize cryptocurrencies are like, well, there's nothing there. It's just, you know, it has no intrinsic value. Well, neither really does our monetary system, right? Gold even is valuable because we say it's valuable, because we give it a value. We believe in its value. Our monetary system is that right now. Most of all the money right now is just electronic transfers. It's software code. It's money being transferred electronically, zipping through the air. It's just numbers in a ledger. So when economists think of money, this is what they think of it, right? Then what does money do? It stores value. And I want you to remember this. It's going to help you understand what's going on with crypto. It stores value. It is a unit of account. What do you mean? So it means instead of me having to trade, you know, one Rolex for 5 cows, or trade it into this and then trade it into something else and trade it into something else, I can say it's a unit of account. I could say one Rolex is worth $10,000 and 5 cows are worth $10,000, right? So I can compare them without having to compare cows to Rolexes. I can compare the value based on the money, right? This is 10,000, this is 10,000. And it's a medium of exchange, right? These are the key things that money is. And the value of it is what we all agree it is. Now, we're getting into the good part, okay? Centralization. What is so different and revolutionary about crypto? Centralization versus decentralization. Now, let me quickly check the chat here and see. Okay, MetaMask is good for using your crypto in dApps. Use it to buy virtual products in a VR game. Some use it to buy crypto kitties. Okay. All right. Okay. So someone asked, have you read Terry Pratchett's book, Making Money? No, but it sounds like it'd be an interesting read. Okay. So no like specific questions about this. So centralization versus decentralization. This is the critical thing of crypto, and this is why the anonymous founder made it, right? Basically, the person who created crypto, who created Bitcoin, I should say, created Bitcoin, Satoshi, nobody really knows who he is. They think it's just a pseudonym, a made-up name, right? And he created it, really the crash of 2008 is what pushed him to do this. So we're going to talk a little bit about Bitcoin specifically because it's the foundation currency for this. But what's the difference between the money we've used for, you know, the last 1,000 years? Fiat money is centralized, right? It's top down. The ruler prints the money. He puts his face on it. He says, I approve this money, right? But on the back end, the ruler gets to control it. It gets to control its value, its supply, everything else. The blockchain, which is what crypto is built on, is decentralized, okay? which means there's no one person that controls it. There's no one entity that controls it. There's no one country or company that can control it. It's decentralized. So like the internet is decentralized, right? In that it doesn't live in one house or one server. It's spread through these connections to computers all over the world. The blockchain and the software for the blockchain is decentralized over all of these computers and nodes all over the world as well. And so a decentralized currency can grow to a much larger market cap than any centralized currency. Now, why is that? Let's take a look. So I told you I was going to give you kind of a tip about how to think about crypto in a way that's going to make it easier for you to conceptualize it, right? Because people think, well, crypto is coins, but there's no coins, right? So where's my coins? Where do I buy it, right? It's better not to think about it as coins or tokens. Think about it like stocks, okay? Because, and what we're going to get to why that is and exactly what all these different coins are and how to think about how to pick coins that are not Bitcoin, right? If you want to pick other types of coins, let me give you a tip about that. Okay, but basically each of these coins, Ethereum, Cardano, Bitcoin, these are companies. They're software companies. They're companies that have developed an amazing software, right? And they sell one product. This one product is something that can be consumed by anybody, anywhere in the world. Think about that. That is totally different way, right? Nike tennis shoes can't be consumed by everybody anywhere in the world. This is selling one, and they have to make like 100 different styles and pairs and manufacture it everywhere, right? It's a whole thing. These coins, these stocks, they're basically like stocks, but they're not regulated in the same way, okay? So I'm just giving you, they're not stocks because stocks are regulated differently, but they're kind of like that, right? You're buying into this software company is really what you're doing. And you want to understand the fundamentals of that software to see if that's a good buy. Now, they sell one product, which means that consumers all over the world can all purchase Bitcoin, right? And so that market is massive. The larger the market cap of any currency, the more powerful it is, right? So right now, as of today, of course, this changes drastically, is Bitcoin's market cap is nearly $1 trillion. Bitcoin alone as a company, its market cap is nearly $1 trillion right now. Ethereum market cap is nearly $172 billion is in Ethereum. And all the cryptocurrency coins around the world, as of right now, which, you know, this number changes moment by moment, is nearly 1.5 trillion. Nearly $1.5 trillion are already in cryptocurrency. So I thought I'd compare it. Think about like how Apple, and honestly, Apple's kind of a weird one, right? Because it actually, the market cap of Apple went up, doubled basically in this last year, probably due to the fact that everybody was home and everybody had to be on devices all the time. So their devices got a lot more important and they started shopping a lot more for those devices. So yeah, I mean, Apple's market cap is just gone insane. But think about that. And, you know, people are like, oh, well, it's so volatile. It goes up and down and all of this stuff. There's a reason for that. And I'm going to explain that. But even if you just look at Apple, it had a 2-week period in which it dropped like nearly $500 billion in value. Like, okay. So stocks can do the same thing for all different types of reasons. So I want you to kind of think about it a little bit more like that. Okay. It's not that exactly, but it might be an easier analogy for you to think about it, especially when you're thinking about looking at as an investment. Okay. It's not a coin that you're going to go spend. It's like buying into a software company which is selling a software product that everybody wants, right? So that's more what it is. And when you think about purchasing these things, these are not, this is not like, let's buy it and see if it doubles and then sell it and, walk away kind of thing. Like this is the type of thing that you can buy and hold. When you're thinking about it, don't put money into it that you're going to need. Put money into it that, you can afford to let sit for 4 or 5 years and see what happens to it. That's what we're looking at when we look at cryptocurrencies. Okay. All right. Let's look at what about Bitcoin, a little bit more specifically about Bitcoin, because a lot of people have questions about that specifically. Let me see. I saw somebody had a question. So the coins are created by software companies, and aren't they also technically centralized? Good question. Good question. Yeah, that's a good question. But it's not the coins that are created. So the software itself is decentralized. All right. The software itself is decentralized. So I guess maybe that's the way to think about it. But that's a good question. We should dig more into that. Okay. Let's dig more into that angle. Let's talk about Bitcoin. Bitcoin is, if anybody else has ideas on that, let me know. All right. So this is the thing about Bitcoin, because everyone's like, why is Bitcoin such a big deal? What's going on? Why is the value going so high? Right. Well, Bitcoin was the first one that actually worked. It wasn't the first digital currency. They tried to make digital currencies before and they didn't work. The secret of what he created and the type of software he created was he was creating a decentralized cash. Right. So it wasn't centralized even for him. It was decentralized. That was how the software was created specifically for that purpose. Now, you're probably confused when we talk about mining and miners. So we'll get to that. But 99% will be mined over the next decade. There is only a very limited supply of Bitcoin, and it was created like that on purpose. Okay. There are 21 million Bitcoins in total. 18.5 million have already been mined. Now, why did he make it limited and made it so that you cannot create any more? That's the design of the software. Because he didn't want it to do the same thing all the currencies do. Inflation, right? He wanted it to be the set, benchmark for everything else. So if he made it so that there couldn't be inflation, then because there was only that amount, you can't print anymore, you can't make anymore. Okay. This is what makes Bitcoin so interesting and valuable. You can't issue more stocks. Okay. Now by 2140, right? Basically it's saying less than 20 years, 15 years, all Bitcoin will be distributed. So people are asking, is it too late to get in? And we're going to talk about that, but no, it's not too late. And another thing to remember about Bitcoin is, and a lot of these cryptocurrencies, is it's been rising on average about 200% a year. And sometimes, it does a big jump up and then it comes down again. It is the fluctuation. There can be a huge daily fluctuation in Bitcoin, just so you know. So like it can be 10% to 30%. So we saw that massive increase, right? It went up to like 50 something thousand per coin. And then it dropped down 10% to back to around 48,000 in the last few days. So that is how it grows. This is something I want you to understand about it, because I was confused about it. So the way these companies, the way they get more people into Bitcoin is they want it to drop. It grows, people put money in. Elon Musk puts $1.5 billion into Bitcoin, right? That's what Elon Musk did. Square, the app Square, has put, I don't know, is it 100 million or something? I'll look at the article. $100 million, I think, into Bitcoin. It has 5% of their cash assets in in Bitcoin now. So, but this is the issue. If it goes up and stays up so high, then people stop buying in. Okay, so they actually want it to drop. They sell off and get the price to drop down so more people can come in. They want more people using it. They want more people in the market. So they actually want that to happen. Okay, so it's useful to watch for it. Like if it jumps down, I'm not worried, right? Because I'm looking for the long future. It doesn't bother me, right? To lose $1,000, $10,000, $20,000 doesn't really bother me because I'm not looking at it right in this moment. But if you want to buy in, then it's useful to watch for those drops, right? Even if you buy in at high, like high now is not high later, right? So it's still fine. But, you know, if that's something you're interested in, then it's useful to watch for those drops, but don't let those drops worry you. Okay? That's basically what I'm saying. It's normal for it to drop like that, and then people are like, woohoo, and they buy in and it pushes it back up again. That's how it works. That's how the system works. It's designed to work that way. All right. Let me see. I thought I saw a chat come in. Oh, and that book does a good job of explaining the psychology behind switching from the gold standard to the trust standard. Understanding that helps you understand the rise of crypto better. Okay, great. Yeah, so that's the book that she mentioned. Yeah, so when you understand kind of the overall financial system, you'll see this is a major transition, but it is kind of a natural transition of our financial systems. So why crypto? Why crypto? Okay, for a lot of people, this is really the reason. Okay, access to money is the key to freedom. So a lot of people who created this have this ethos about money, I'd say. Okay, she's asking, how far do you think Bitcoin can rise in value? Well, I'm going to explain a little bit about what I see as the future of Bitcoin, and we're going to talk about that. But I will tell you right now that a lot of experts out there are thinking that it could rise to 100,000 by the end of this year. So that's not out of the realm of possibility. And we'll talk about why that is and why the future could be far, far higher potentially. Okay. But access to money is the key to freedom. So this is a big, big issue. All right. And this is an international issue. Bitcoin is, so because Bitcoin holds that value, right? And no government can mess with it and they can't change the value of it. They can't say, we're going to say it's worth this, or we're going to devalue it. You know, we're going to cause inflation to it. They can't do that to it. It's decentralized to people all over the world. It allows people to hold value regardless of their government or their country resources. So if you're, you know, some poor little, you know, tea farmer in Sri Lanka, and you happen to use your cell phone and buy some Bitcoin, you know, it doesn't matter what the currency of Sri Lanka is doing. Now you hold an asset that isn't tied to that anymore. See? Game changing, game changing. It's also taking the production and control away from money away from the government. Why is this a good idea or a bad idea, depending on how you see it, right? Depending on if you're the government. It's a reliable store of value, right? That's basically, well, that's what they were designing it for, right? They wanted it to be able to store value that couldn't just be changed by, you know, one political party. All of the cryptography and the way it's designed makes it mostly tamper-proof. Doesn't mean people can't steal it, but the design of it, which is a little too complicated to get into right now, the design of the software makes it very hard, if not almost impossible to tamper with. And no single entity controls it. What is the social impact? Why are people excited about this? It goes back to what I talked about, the tea farmer, okay? There are 4 billion people unbanked. There are many countries where a lot of these people cannot open bank accounts. Their governments don't let them open bank accounts. Authoritarian governments freeze bank accounts and shut down the ATMs anytime people start doing something that they don't like. So, and this has happened over and over again. It's happened recently. It happened in, Burma. It happened in Myanmar. It happened in, Venezuela. Happens in a lot of these countries. And when people are unbanked, then it's incredibly costly for them to even access the money they do get, right? If they get a check and payment, and then they have to take it down, and they got to go to a check changer who takes a huge chunk of their money to give them their money. Okay. So the impact on the poorest of the world is massive in this sense of being able to not be banked. Okay. I don't know if you guys remember back when I was in China in the late 90s and cell phones were just starting to be a thing. Okay. And it was amazing because before, in order to get a landline, so complicated, right? First of all, you had to have a home, you had to apply, you had to pay this massive down payment. It could take a year or two for them to even install a landline in your phone. It's just huge issues. So most poor people didn't have phones or didn't have access to phones. When we got cell phones, all you had to do was walk into a store, buy the phone, right? So all of a sudden I started to see all of these people who you could tell, like from how they dressed and, everything, they were very, very poor, but they all had cell phones. They all had access to connect now. So think about, that's what this is doing. People in a lot of countries, like in America, it's fairly easy to open a bank account, but still you need an address, you need a social security card, you need all of this stuff, okay? And so, but like homeless people, they really can't do that. So but with this, basically you can open an account and buy it. If you have cash in it, you can buy it. You could be homeless and own Bitcoin. I mean, that is kind of the amazing possibility that's available with it. So people who couldn't invest before now have access to something where, like they couldn't open a Charles Schwab account and they're not gonna be able to figure out all of that stuff. As they gain information about this, they actually have the access to be able to do it. It's actually really easy and simple to do. So this is why this is kind of a game changer. So Z is saying, this is clear. It seems like kind of thing the governments will want to squash or get in on and find a way to control somehow. What is the reaction of the traditional banking to crypto? Great question. We could see this recently with the whole GameStop debacle. Yes, exactly. So one reason why for years I've just been kind of observing the space, okay? I didn't jump in and buy crypto early. I wish I had, but I didn't. I'm a lawyer, so, I'm a little more, how do I say, risk averse. And for me, one of the biggest questions in my mind was, how are the governments going to deal with this? Are they going to shut it down? So we're going to talk a bit about that, and the banks, right? Why do I think that right now it's different? Yeah, 100%. This does not seem like something that they would like, right? Because it is taking control away. At the same time, it is now so big and so massive that it's different, right? Basically, right? It's over $1 trillion industry now. And if they close it here, people just can go overseas and do it, right? It's not, they can't just say, well, stop it in one country. Some countries try to ban it. Some countries have banned it. Doesn't mean their people just go buy it somewhere else and they can still hold it on their wallet. And if they leave the country, they can use it, right? So it's very hard to put that genie back in the bottle, I guess you could say. Now, what I've been worried about is like how our governments are going to try to regulate, control, make it harder for people. But at this point, they seem to be jumping on the bandwagon. I think they realize it's not really something they can stop. There are too many huge companies that have massive holdings now in crypto. And you see that that's the major transition that's been happening. In just the last few months, I mean, it's been happening behind the scenes now for quite some time. Like they were doing it all this time. They just weren't advertising it because they didn't want everybody to jump on with them. They wanted to buy it while it was still cheap. But now we have major banks that are coming in and starting to take assets, hold assets in crypto, right? Like JP Morgan and BNY Mellon. And I mean, we have huge banks now that are entering this space. The big hedge funds have been doing it for quite a while, but like major ones now. So it's becoming something where the big institutions now are moving into it, right? And you have billionaires and these big companies. That's what's happening. That's the trend right now, which means that I'm less worried about that, right? Because all of these big boys, they're all in bed together, right? The heads of the banks are all the ones that become the regulators. They are all making out massive. So, which is why with these trends now, with the big entities coming in, I'm less worried about it. Of course, there's still going to find ways to regulate it. There's things that people think you can do that you can't, but we'll talk about that too. Okay. So, why might this be interesting for you? Why is it interesting for me? There are big issues with the banking system. Okay. We saw the massive manipulation that happened in 2008, right? Just that huge crash that was due to manipulation of the banking system. They're not transparent. They can decide on inflation as they choose. And this is really, really key, people. I want you to understand this. You don't actually own the money in your bank account. Okay. And believe me, I have a lot of clients who unfortunately realize this too late. Okay. There is a way in which the banking system is set up. When you open your account, you put that money into the account, you don't really own it. The bank can shut it down. The bank can freeze your account and make it impossible for you to access it. You could spend years fighting it, right? So you don't really own that money. Crypto or these type of exchanges and platforms that people say, well, it's risky, you're putting it onto this exchange and where is that company? A lot of these platforms are backed by insurance as well, right? Similar to how the banking system is backed by insurance. But if you really want to be safe about it, crypto gives you the ability to physically hold it in your hand, right? And not cash, where cash is just getting inflated away, right? So if you put $5,000 in an envelope and you stick it in under your mattress, right? It's not going to be worth $5,000 a few years from now. And the other thing about cash right now, what you need to understand is it's going away. Cash is going away. Most people aren't aware that this is happening, but there is a major move to get rid of cash entirely. Have you noticed how many places don't accept cash anymore? Banks don't want to take cash. You try to bring a big stack of cash to a bank, they don't want it. They will give you cash, but they don't want to take in large amounts of cash anymore because they're just packing it into like the walls of these warehouses, trying to figure out how to get rid of it. They're trying to push everything online. They don't want to deal with cash anymore. So Bitcoin is a way you can hold a large amount of value in your hand, right? You can literally hold it. You can put it in a safe deposit box. You can put it somewhere instead of which cash is not really going to work for in the future, right? You could do the same with gold bars, but they're even harder to transact in, frankly. So, okay. What are the downsides of crypto? The downsides is you are fully responsible for it, okay? You can't go to the bank and be like, oh, you got scammed, I want my money back. There's no chargebacks. You transfer that money. That's why you have to be so careful. You check and you double check the address of the wallet you're transferring that money into, okay? It is only your responsibility. But, with freedom comes responsibility. So you have to be responsible to keep your passwords safe, to write them down in the right location, not to lose them, not to send it to the wrong address. And the value can fluctuate wildly. So I'm not talking about using it as a medium of exchange, right? I'm talking about it in more in the way of like thinking about it as a long term. That's how I buy. I buy it and I just hold it for the long term. And we're going to look at where that future is potentially going. It's pretty exciting. Okay. What are some of the issues of the regulation? How are you guys doing? How's everyone doing? Say, let me know if you want me to keep going because we've been going for an hour. So
keep going. That's really great.
This is
okay.
amazing.
All right, thank you. Well, this is what I work hard to do, is to try to sum it all up for you, but there's just so much information. So yeah, so let's keep going. If you're ready to go, I'll go. All right. So what's going on with the regulation of this? It has a bad rap because they're saying criminals use it to evade paying taxes and they use it to launder money and so on and so forth. Yes, they do. But guess what? Criminals have been using cash and bank accounts to do that for, you know, a very long time as well. Criminals will always find a way. And there are some myths about it that it's like totally anonymous and so on and so forth. And that's where the regulation is coming in. So a lot of the regulation is coming in to make it so it's not anonymous, right? That's why all these exchanges have such strict KYC stuff. But criminals have always been able to transact in cash or whatever it is and get away with stuff. So, you know, but yes, that is one of the issues. The legal status of these coins varies by countries. Some countries their central banks are creating their own cryptocurrencies, and others ban it, right? So it's still the regulatory environment in different countries is wildly different. Sometimes they also classify as a different type of an asset, right? Which will change how it's taxed in these different countries. One thing is interesting is that one concern is whether Congress has the power to prohibit the use of virtual currencies, because it's, you know, given the power to create money. It may, under the Constitution, we're, you know, a little bit unsure, but would it use that power? At this point, probably not. No, I think the barn door has been open and the horse is gone. So, you know, but that is something to know, that there is a possibility of that they might try to claim that in the future. The IRS is jumped on board and is taxing away happily. So the IRS treats it as personal property, right? So a lot of these things, they're trying to play catch up with regulation to try to control it and try to get whatever they can out of it. Because it's creating just an enormous amount of value. So what's the government want to do? Wants to grab some. Now, the part about how the IRS taxes it is not very good. It makes it difficult for people to use. So basically it taxes it as personal property, which means every time you make a transaction where you exchange from like a Bitcoin to Ethereum, or you buy or sell it, right? You have to know what the gain and loss is of each transaction, because you have to be able to compute that for your taxes. Now, what's the pro tip of how to get away from not doing this? Well, one, if you buy it and you just hold it, fine, right? You're not out there like a lot of these guys are out there trading currencies, and that can get massively like messy and confusing. So some of these exchanges will, you know, potentially help you like list the transactions, and you know, you have to go to your accountant. But if you're just buying and holding it, not a big deal. The other thing to do, and this for those of you ninjas who remember we were talking about stocks and stock trading, is if you put it into your 401k, right? If you buy it out of a retirement account, then you can trade it as much as you want. And you don't have to report the tax on it. It can grow and whatever. And then only when you take it out later, do you have to worry about that. So using a retirement account to put the money into, to hold your crypto, right, is another way you can do that. All right, let's see. We have got some questions here before we get into this. Okay. All right. Do you expect crypto to ever replace fiat money completely? Great question. I expect that they are going to continue to coexist for quite a few years in the future. You know, they may continue to coexist forever. I mean, the governments never want to give up their power. Their governments will create their own version of it. But yeah, it's going to be interesting to see how that plays out in the future. Obviously, digital money will replace currency completely. That's going to happen, and that's going to happen a lot sooner than you think. Excellent information. This is fantastically well researched and insightful presentation. Thank you so much, Faith. Aw, thank you. That's so sweet. Okay, so for the taxing of exchange between two, sorry, I'm trying to scroll down here. Between two coins, you have to determine the local currency versus each of the, sorry, why am I struggling to read this message? Hold on, I'm guessing this is a tax question and I'm trying to scroll down so I can see it properly. Okay, for the taxing the exchange between two coins, you have to determine You have to determine the local currency versus each of the two coins okay, so he says in Canada, each of the two coins you exchange at the time of the exchange. Yeah, basically, yes, right? Fortunately, your exchange will track that and it will have a list of all your transactions and it will say, you know, you transferred this into this and yeah, but it's a massive pain in the butt. It says in Canada, we can trade BTC and Ethernet inside a tax-free savings account via a couple of different EFTs and mining-based companies. Great, yeah. So to Canada looks like it's, you know, created that. But EFTs are really EFTs. You're not actually trading the coins themselves, right? So if you're using an EFT, that's like a stock. Basically, it's like a selection of stocks, right? Like a fund. So then you're not really trading the coins itself if you're using EFTs. Or sorry, ETFs, or mining-based companies. Okay, no, that's something else then. So that's good. And like I said before, even in America, you can trade the coins inside a kind of tax-free, say, kind of a account, but it would have to be a retirement account at this point. So looks like Canada's got a little better system in place for this. All right, let's talk about the future of crypto. What is going on? Kind of what's sort of the vision of where we're going with this? All right. The reason Bitcoin holds value in the way it does is, you know, we talked about the decentralized, it's a limited supply. You have to understand that 85% of Bitcoin being mined is not ever put on the market. They're just holding it. Okay. When we saw that big dip, they only sold like, what was it, 2,700, 3,000 Bitcoins were released and it caused that big dip. There are millions. People are just holding them. Why are they holding them? Because of the potential of the future value. Okay. So when institutions start buying up more, they're just going to lock them up. It's going to become very difficult to find them and to buy them because the institutions are going to hold them and lock them up. Okay. And they've got the billions of dollars to put into this. That's where we're going with it. A good tip is if you can get anybody to pay you in Bitcoin, do that. Okay. All right. What's going to increase what is the future of this? Where is this going? What's going to increase Bitcoin value and the value of other types of currencies? Okay. Bitcoin is never going to be, I mean, you can use Bitcoin to buy things in a lot of companies, actually, believe it or not, but it's not easy to use as payment. There's a lot of other, the altcoins, which are being designed more to use as payment, right? But the value of it is going to increase as more people accept it, right? So more people get into it, more people purchase it, there's a higher demand, there's more money that actually goes into it, right? That's going to increase the value. As more vendors accept crypto as payment, You can use it more easily. That increases the value. And of course, as the big money starts to pour into it, and this has already been happening. This is not new, but now they're doing it publicly. Okay. We've got the institutional investors coming in. We've got the big banks coming in. We've got the billionaires, right? Elon Musk is not the first and he's not the last. Okay. These guys are putting $1 billion into this. See, when you're putting that kind of money into it, that the value, right? The whole new hold value has to hold at a much higher level than before. All right, Bitcoin becomes a backing asset. So this is talking to some of my friends who have been looking into this for a long time. This is more where they see it going, okay? What is this talking about? So Bitcoin, when the value, or if the value goes to like hundreds of thousands of dollars per Bitcoin or $1 million per Bitcoin, right? That's where people are thinking about and looking at it, right? You have to understand there's only a tiny, tiny percentage of people that are in crypto at all, okay? I think I just read a statistic, I was on the blockchain that said like just past 100 million people in crypto. 100 million people, users worldwide. That's a lot, but it's still teeny tiny, okay? So there is just massive, massive room to grow and massive room for adoption. So basically, Bitcoin is, the way people are looking at it is it will become a backing asset. So it's not something like people will hold those coins. They don't sell them. They're just going to hold them. You got your Bitcoin. It's worth, $500,000 or whatever, $1 million, who knows, right? You just hold that. You're not going to sell it. You're not going to trade it. You're not going to move it. But you can take out loans based on it, or other people may ask you to back something based on it. It can back mortgages. It will be able to back things as an asset. So it's going to change how we use it. Even now, you can do that. You can take out high interest loans on it, but I don't recommend you do that right now, okay? So basically, it has the ability to become a reserve asset, right? So it's a trustless system. You don't have to trust what anybody's going to do. The smart contract executes. You say, boom, it executes, done. You don't need the middleman. That is what this has done. That's what the brilliance of this. You don't need the middleman, okay? Huge, huge issue with the banking industry. Oh my God. So when I was over in Hong Kong, right, trying to help a client who has a US citizen, he wanted to open a bank account in Hong Kong, and totally legitimate business, nothing wrong with it. The Hong Kong banks would not open a bank account for him because that would make them subject to US regulatory laws. And I remember I went in the bank and I finally got to see the manager, and he had a whole stack of, he's like, I'm closing thousands of accounts. People have been like customers of mine for 20 years. We're just having to go in and close all their accounts because we can't do what the US banks want, right? And because the international monetary flow, when I make a transfer, when I make a monetary transfer, I want to send money, like I want to wire money somewhere. Even if I'm making the transfer between, say, Hong Kong and England, okay, that money will most likely bounce through a US bank. So what the US bank did is they threatened everybody, all the banks around the world, and they said, we're going to stop those transfers. We're going to freeze that money. We're not going to let it pass through if you don't do all of this stuff that we want you to do. Just horrific overreaching of the regulatory environment. I mean, basically just standing there and blackmailing the whole entire worldwide banking system. Okay. So what is this? They're the middleman. They're the middleman in that transaction. You're trying to make an exchange. They're the middleman sitting there saying, not going to let you do it. Okay. Crypto and Bitcoin is a trustless system, which means I don't have to wait that someone's going to send me the money. You execute that contract, boom, it happens instantly. There's no middleman. It's a neutral asset. It's decentralized, right? So there's not one institution that can control that flow because it's happening. The way the software works, it happens through all the different computers everywhere. They use proof of work. So mining is, I'm not going to get into that. That's too complicated. Okay. But basically, what's going to happen when all the Bitcoin is mined? Okay. People are still going to want to get Bitcoin, but the only way to get it is going to be either through someone selling it to you, but most people are probably just going to hold on to theirs, or you're going to have people who will leverage it, right? So they'll be willing to say, well, I'll loan you cash backed by Bitcoin. If you can't pay me the cash back, then I get to take your Bitcoin, right? Like you do with a house or an asset nowadays. Another way is that miners will be able to make teeny transaction fees just from moving the money. Okay, when you transfer money in crypto, you pay small fees, much less fees than you do for other types of transactions and transfers, but you do pay small fees. And we can talk about gas fees. And so let me just tell you one thing right now. Right now at the moment, better not to transfer your money. Okay, right now, because it's just such a massive influx. They're called gas fees, which is basically the fee you have to pay to transfer money, to move from one crypto to another, to move from one account to another. Those gas fees on things like Ethereum and stuff are really high right now because the demand is so high. So just be really careful and watch. You're going to need to watch those gas fees and see how much they are, because you don't want to lose your Bitcoin or crypto to a high gas fee when you're transferring it. So at the moment, they're very high. So just think about that. Like for me personally, I have some on Coinbase that I would like to transfer off, but I'll probably wait a few weeks and, see where that goes and the market goes, so that it's not going to be so the gas fees are not going to be so high, which means because they're going to take that out of my money that I transfer. See? So understand a little bit about that. Make sure you check what those are. That's just a little tip, like a current tip, but let's get back to this. So Bitcoin as a backing asset, you can take out loans against Bitcoin, but I don't recommend doing it right now. Basically, the future is where it's going to be a highly valuable asset, right? So why would you not want to bet? Like right now, your Bitcoin might be worth $50,000, but in the future it could be worth, a few $100,000, and you don't want to have it pledged to back that little $50,000 loan. You see? So be careful when you think about how you use it and do that. And if that becomes a thing, we'll talk about it more in the future. But the other aspect is, if you do this in the future, don't let the lender hold your keys exclusively, okay? Because the business could be hacked, they could go out of business, etc. All right, there are some companies now that do high interest loans against Bitcoin, but like I said, why do that right now? The tech of crypto. Whew. Okay, how is everybody doing? How's everyone doing? All right, we've been on for an hour and a half. All right, let's say this. Let me see what's going on. I'm sure you're going to touch on this later, but I'm very interested in your thoughts on some of the major coins that are out there currently. Still great, don't stop. Okay. Okay. All right. Yes, well, we can talk about the main coins that are out there. Definitely Ethereum, right? Like Anthony's saying, Ethereum before it splits. And we're going to talk about how to look at those coins. Okay, this is what we're going to talk about. All right. Yeah, so there's some interesting stuff coming up with Ethereum. For those of you that weren't, all right, so let's talk about crypto terms. The tech of crypto. This is going to be really, I'm actually not going to get into this much. I'm just going to kind of say a couple things here, okay? But basically, the way the software works is that you have all of these people running all these algorithms on their computers, super high-tech computers, that confirm each transaction. So the miners that do this work on their computers, they get paid in Bitcoin, okay? When they confirm, they're basically doing the hard work. It's like literally like they go in and they have to dig and mine, right? It's that version for software. So they get paid in Bitcoin, and that's how Bitcoin gets released into the market, right? But it gets released slower and slower and slower, because as the value of Bitcoin goes up, the amount that the miners get paid goes down. Okay, users are people who just hold it and exchange. And developers are people who are creating new coins, which basically means they're creating new applications and new software. All right, let's see. Kind of like when a stock splits. Yes, yeah. So there's some interesting things. Ethereum has made some interesting changes recently, which we can talk a little bit about. And you guys are welcome to come on and talk about it too. Like at the end of this, I'm happy to have you guys just come on and chat. All right. So what is Bitcoin? Basically, Bitcoin is a decentralized cash system. That was what it was designed to be. All right, now it's becoming a reserve asset, so it's going to be less fluid than how we think of as cash, but it was designed to be a decentralized cash system. You can pay for things, you can store value, and you can make exchanges without having a middleman. By people backing it and agreeing to use it, that's what gives it value. See, people put billions of dollars into it, it gives it value, right? People are using it as means of exchange, it gives it value. Remember, we talked about the 3 things that money is to an economist. So all the transactions are stored on a public ledger. So it's transparent. This ledger is public in the similar way that digital money, like fiat money, is stored in a bank or company ledger. And the entries about this, some people, they call it a coin or token or whatever. It's a decentralized consensus database. So part of the work of it is you say, this transaction happened here, this transaction happened there, and they all have to confirm it. They have to come, a bunch of these miners that are running the review of the transactions confirm that it happened. And once they've confirmed it, right, they've all independently confirmed it, then it gets locked in. Can't be changed, it can't be tampered with. It's locked in. And that's when they say the blockchain, it's because they do all of these confirmations, becomes a block, right? There's a series of transactions that entered in each block. And that's how they build it. But it's open so that that ledger is there. So cryptocurrency, I can't get into this, but you want to understand, if you want to do some more reading on it, understand blockchain, which is the underlying structure and the use of smart contracts. Okay, how do they get rid of the middleman? They're creating a contract in software. When I watched a friend of mine start doing software, he was writing code, writing software, and he showed it to me and he explained it to me, and I was like, oh my God, that's actually just like writing a contract. It's literally like writing a contract. You have to make sure that this refers to the right word and the right definition of that word is there. I mean, writing software was like writing a contract. So these smart contracts are software that automatically say, if this point is hit, if we give this for this, they automatically make that transaction happen, right? There's nobody that can stand in the middle or stop that transaction from happening. Those are smart contracts. Now this is stuff you definitely want to, if you want to dig in, go in and start like reading about it. There's lots of cool little YouTube videos that simplify it, just like Google YouTube videos, see the cartoons, just educate yourself. So important to educate yourself, because this is not just building currencies. Blockchain is building massive systems of the future, right? You're going to have all of your medical records on blockchain. You're going to have all of, the way you identify objects on blockchain. I mean, it's going to be insane, okay? All of this stuff is moving on to the software. It's kind of like, people are calling it the internet part 2, okay? So all of these things are going to be moving, processes are going to be moving onto blockchain because it works much better. That's kind of the idea of it, okay? So really do get yourself up to speed on it. What are the main cryptocurrencies that we've got right now? Okay, Bitcoin, obviously, that's the big daddy. If you can get some, like I'd say, you don't want to miss out. Altcoins are all the rest. When they say altcoins, they mean all the rest of them, okay? Those are things like Ethereum, Litecoin, Ripple, Cardano, like all of these other coins. So I would say the 2 main ones to look at if you're getting started are definitely Bitcoin and Ethereum. Those are just the 2 main ones, okay? If you want to start looking at other ones, I'll actually talk about that in the next slide. Stable coins. Stable coins, very, very interesting, okay? USDC is a coin that's tied 1-to-1 to the US dollar. DAI is tied close to 1-to-1, but it fluctuates slightly. So people use these on a lot of platforms. What people will do is if they feel like they want to keep some of their money in a stable coin and put the rest into these other cryptocurrencies, which have much higher fluctuations up and down. Okay, but there are platforms where you can hold stable coins and make a much higher interest rate on them than you can in your bank account. And then you can still easily transfer it back into your bank account. Okay, and you're not worried about the fluctuation that's happening with a crypto coin. Okay, so this is a top tip, top secret. Okay, top secret tip. Okay, but right now, what you can earn on that is still nothing close to what's going on in the actual crypto markets. But I always keep a portion of my money easily accessible in something like that. You don't want to like I said, money you put into actual cryptocurrencies like Bitcoin and Ethereum should be something you don't need to touch. Shouldn't be something you need for your day-to-day living. Okay, I'm not going to get in too much into that, but let's look at Ethereum. I want you to understand what these are and how to think about these different coins, and it'll help you research the coins. Okay, so Ethereum is actually, I think I spelled this wrong. Apologies. Ethereum. Oh, I can't remember. Anyway, nope, I got it right the first time. I guess. Okay, so Ethereum is a decentralized platform. Why is Ethereum so valuable? They created a software platform for everybody else to build applications on. They build smart contracts and stuff on it. It's not a coin. You think it's a coin? It's not a coin. It's software. It's a software platform that people can build on. Okay, and they can build applications. They run all of this stuff without control or interference from a third party, which means without fraud and without downtime. That is the magic of what Ethereum does. So all of these developers are out there building on their platform. Now, Ethereum just made a big switch, which is what people are talking about. Kind of really brilliant, I have to say. So what Ethereum did is it used to be proof of work, used to base the value in the mining and stuff on proof of work like Bitcoin does, right? That's the hardest one. So that has value. It's switching now, it is switched over now to proof of stake, which means in order to build stuff on their platform, in order to mine or to earn interest or whatever, you have to show that you own a certain amount of Ethereum. And you have to stake that. You have to put that in and say, okay, this is my stake. I'm going to hold it here. You have to do that to build applications and run applications on there. So what did they just do? They've created a massive market for their own thing. Everybody wants to use this platform because it's, kind of the industry standard, so to speak, to build on. There's other ones out there and people are continuing to develop them, but they want to use this platform. In order to do that, they got to stake Ethereum, which means they got to buy enough Ethereum. They got to hold enough so that they can stake it so that they can use the platform. See, for the developers, pretty brilliant. That's why the value of Ethereum is getting pushed up so high as well, right? Because all these guys now got to get a hold of it to be able to use the platform. They have to have proof of stake instead of proof of work. All right, let's keep going. All right, so the way to think about altcoins, if you want to research altcoins, you can read their white papers, okay? They are software companies. So you want to find one, each of the different softwares, find one that solves a problem. If you read their papers, they're not creating just a coin. All of those people that just created coins, that's baloney, okay? Those are the ones that blew up, okay? The coins, right, are really software. If that software solves a problem, right, it makes it run faster, it makes the blockchain run faster, better, whatever that is, then that coin, that software is going to have value. So that means that to use that software, people have to get that. They have to buy the coin to use the software, you see? And if it makes your system run faster, it makes your app run better, then if it solves a problem on the blockchain, people will keep getting it to use it, right? So like Cardano, for instance, it just seems like a company that nobody really knows much about, but it's software that solves a problem. Ethereum is software that solved a big, big problem. So when you're looking at altcoins, you want to read the underlying white papers and ask yourself, is this software that's solving a problem? If it's not, then it might just be a flash in the pan kind of a thing, okay? Or if there's another software that solves that problem better, that's really what you're looking at, okay? That you're looking at the underlying mechanics of it. So why did so many people lose money? Why did it get such a bad rap? I actually started looking at this years ago, and with the ICOs. They're called initial coin offerings. Now, why does that sound similar? IPOs, right, are similar to how we put a stock on the stock market. Okay, so ICOs, this is basically the Wild West. Anybody was just making up a coin, throwing it together, just saying, invest with us. And then, you know, a lot of these things disappeared. This was the issue, right? People would make it up. They had no value behind it. They had no real, like I was just saying, that they had no real software that had a real value that was actually doing something. So the government started to crack down on this. And I have to say, I don't do ICOs because until you've seen some track record of this stuff and you can really understand it, it's still pretty dangerous, right? Somebody's writing something here. Also, you can now own virtual property or art on the Ethereum network. If I remember correctly, a piece of digital art recently sold for 6.2 million. Yeah. So there's a lot of really exciting stuff coming up, which I'm not going to get into about that sort of thing that's coming. Okay. But just so you know what's going on with the ICOs, that's what caused all the big issue. All right. There was these things that had no value behind them, no backing. People were just throwing money into them, hoping they took off. You know, sometimes the founders disappeared with the money, whatever, just like kind of bad, you know, like a bad unregulated stock market, basically. So you're not looking at ICOs in this case at all. But this is what gave it a bad rap. What's going on right now? This is actually pretty exciting. What's happening now? Something called STOs, securitized token offerings. And these are much closer to the actual stock market. So these are going to be where companies, real legitimate, you know, companies with balance sheets and everything are going to start creating their own tokens. And you'll be able to use those tokens to shop for their products or whatever that is. It's regulated. That's why it says securitized, okay? Because they're just have to follow the securities regulations in order to come out with an STO, and the value is backed by a real company. Now, the interesting thing is, you know, how soon are companies going to start transitioning from the traditional stock market into more of these? This is going to make it easier for a lot more companies to, you know, have people invest in a way, right? So this is a major transition. Keep your eyes open for this. But this is where it's going. So, you know, these are backed by something, not just a group of people getting together and saying, oh, we're going to create a coin, right? So that's where we're going with that. Okay. Who controls Bitcoin and this stuff? Nobody. All right. Okay. We are actually almost to the end. You're going to get to some really cool, exciting stuff in about 2 slides. So yeah, stay with us. All right. Public perception. Why has it been kind of slow to catch on? Well, obviously, like you said before, governments, regulators, they do not like this. They're not excited about this. And guess who owns the media? And guess who tries to put out as much scare tactics as possible? You know, the news media. Okay. And these guys have been putting it out because they don't want people buying in, especially not before they do. But that perception is changing. It has to change. It's been changing over time slowly. For this fact that there was a lack of a wide business acceptance, that's changing. Oh my God. Do you know when I realized we kind of crossed the threshold I was filling up at a Terrible's gas station. That's the name of the company, Terrible's. It's in Vegas. I was filling up at the gas station, and you know how the gas station, the machine like starts blah 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 blah, has a little TV and starts talking to you, all these advertisements, and it started saying that they transact in Bitcoin. I was like, what? The gas station is telling me transacts in Bitcoin? Like, when the gas pump is telling you that, you know that we have crossed a threshold, right? We have crossed a threshold in acceptance and in this massive move and adoption. So just I want you to see where we're at right now, even if it's something you don't hear about that much. And to some extent, the lack of government oversight has made some people, it makes them much more nervous. And for some people, they're like, yay, this is what we want. We don't want the government in our business, right? So it kind of depends on which end of the spectrum you are as to whether that's a positive or a negative. But that is continuing to change. What are some of the myths? Some of the myths that you are anonymous and cannot be tracked. All right, this is the thing. In fact, there is a far better record of everything you do on the blockchain, and it will exist always. Okay, so even though you might have an anonymous wallet for now, if it becomes public at some point in the future, if the government goes and takes it or forces you to release it or whatever, then they'll be able to track all the transactions way better than anything else. So I've been saying for quite some time, people are like, oh, we can do this illegal stuff and whatnot. I'm like, no way. I mean, it holds a way better record of everything you do on the blockchain, and it's transparent. So it's only not known as long as they don't know what your address is, wallet address. They haven't linked that to you as a person. But once that is, you'll see everything there, all the transactions from that. So understand that. Don't think you can go around and do sneaky stuff and that it's not going to be found out, because probably will in the future. That you don't have to pay taxes. People have been trying to use this to hide money and not pay taxes. Definitely can catch up to you. And a lot of people think you cannot put it in your 401k. This is not true. Okay. But if you have a 401k that is on if you have a 401k, like with a Fidelity or with something like that, right? Then you can't. They won't let you purchase it and hold an asset, just like they won't let you purchase real estate. They only let you purchase their stocks and their funds. So they might let you purchase like a crypto fund, but as long as those people are holding it and controlling it, you don't really control it either. You don't own it. A self-directed, if you have a self-directed 401k or IRA, you can buy and hold crypto in it, but you have to get the self-directed. There are a few companies that do self-directed. You go online, find them. We've talked about it before under the 401k class, but you can buy, hold, own that and other types of assets like real estate in your 401k if you have a self-directed one, right? So if you're not with one of the big institutions. Okay, how is everybody doing? This is the last few slides, and this is going to be some fun stuff. How's everyone doing? Y'all still good? Someone
Still
says,
here.
Ladies in Carmel talking about the NPR hour audit. Yeah, right? Pretty exciting. Okay, so everyone good? Now this is kind of the fun part. All right, this is kind of a little bit of the fun part. We've dragged you through the history and everything else. Doing awesome. Okay, good. I'm glad to hear it. Good, Jenny. All right, so I've dragged you through the history and the the monetary policy and the future and where it's going and how to buy it. And now we're going to look at something pretty cool. And that is what's kind of been going on with astrology. So one of the things I had managed to do in this last year, as well as learn investing and studying money, was I also studied astrology for fun. And not just like, you pick up your horoscope and not that bullshit. Okay. But actually like how to read a real chart, the planets and how that stuff works together and what those things mean on a macro scale. Now, I am not an astrologer. I don't pretend to be. But it just means that when I watch these webinars now that people do on this, I understand it and I understand what's going on. So if you watched, I started going live on Facebook and YouTube every day at 10 a.m. Pacific. Please come on, subscribe to the channel, and then hit it so the notifications, you get notified every time I come on. And then that way I can say hi to you and you can see what I'm talking about each day. So I did talk about this massive transition that happened on December 21st, 2020. So what is happening right now, just on a massive macro scale? If you Google online, you'll see lots of astrologers talking about it, the Grand Conjunction, which was the movement into the actual age of Aquarius that happened on December 21st, right, which is the winter solstice of 2020. Now, this was what my parents were singing about, the age of Aquarius, 40 years, or 40 years too early, 50 years too early. That this actual transition in the age of Aquarius happened on December 21. Now, what does that mean? Okay, what does it mean? Basically, what that means is, I'm going to scroll down here quickly. So there are two big planets called Saturn and Jupiter. These are the planets that historically from Roman times, right? They come together in conjunction, means they come together and they look like they're almost one planet, right? They're in direct alignment with each other. And they do this about every 20 years. So in the ancient cycles, they would consider this 20-year political cycles, 20-year sociological cycles, okay? And it would have sort of a new theme, I guess, or feeling to that next 20-year cycle. Every time they would come together, depending on what planet they came together and conjuncted in. But there's also 200-year cycles. The 200-year cycle is that these planets meet for their 20-year cycle in a particular type of sign. So astrologically, we have air signs, earth signs, fire signs, and water signs. And just with the name of the element, you can kind of understand what type of characteristics would be with that type of element, okay? Just use your imagination. It's pretty easy. So for the last 200 years, these planets have been coming together. These social planets have been coming together in earth signs. Earth signs, what had been the theme of the last 200 years, right? Colonialism, conquering, institutions, building, amassing control, capital, wealth, oppression, lots of types of stuff like this, okay? Building big things. So this last 200 years, the theme has been in earth signs for 200 years, right? The monetary system was based on gold, right? An earth, an element, okay? Now for the next, so what happened on December 21st was that it was the beginning for the next 200 years. These planets are going to conjunct in air signs. So the first one is Aquarius, but for the next 200 years. So it's a huge sociological shift on kind of like a macro planetary level. And they're going to be coming together in air signs. So what are the qualities that we think of when we think of air signs? Okay. These are the kind of themes of Aquarius, right? These are Aquarius type of themes is really looking at humanity as a whole, the redistribution of wealth, transparency, simplifying things, getting rid of the complexity, a higher emphasis on ideas and ideals rather than sort of physical wealth and amassing stuff. And it's also a theme of power to the people. Okay, so Aquarius is going to be the theme for this next 20-year cycle now that but it's also, we're looking at a whole shift into air signs, right? What has happened? What happened in 2020? What happened in 2020? COVID pushed the whole world where? Online. It pushed everything into the air, right? Everything is now traveling at the speed of electricity. It's all online. All of the last adopters, all of the final holdouts, all of the old grandmas who refuse to be online, right? They're all online now. They all had to get online. That was what COVID did. So it's fascinating to me that in the single year before this major planetary shift, this thing happened that pushed everybody, it pushed the whole world online, just at a massively accelerated rate. Okay, just before this transfer into the age of Aquarius. So think about that. Think about that, what's happening with that, okay? And the other thing about COVID is it was actually a conjunction of 3 planets for that entire year of 2020. And so astrologers knew something big and bad was coming. They knew it was coming. They just weren't totally sure what. But it was the conjunction of Jupiter, Saturn, and Pluto. And Pluto is the planet of death and rebirth, and it also rules viruses. Right? Jupiter makes anything it touches bigger, and Saturn is a contraction. So what do we see? Massive spreading of this virus, contraction of the economy. And that conjunction held for all of 2020. And it's only now being released. It entered it near the beginning, right near the end of 2019, like beginning of 2020, and it held that whole year. So now we're going to see a release of this issue with COVID that's going to start to dissipate. According to like the way the astrologers see these planets. But it's fascinating when you're looking at this macro stuff. It's very different than looking at just like a little, what's going on with your, what did I read in my astrology thing on the internet, which is bogus, FYI. Those things really can't apply to you. So just don't even bother. All right. So what happened? Let's look a little bit further back. The astrology of money specifically and the internet. In the 1990s, there was a huge gathering of planets in Aquarius. And that was just when there was a massive expansion of the internet. Okay. In 2018, we had the financial crisis. In 2020, I said COVID pushed the whole world online prior to the Grand Conjunction that shifted us into the age of Aquarius. All right. What is happening right now? Basically, Uranus is in Taurus, and it's going to be in Taurus for the next like 6 years, right? Or, well, what are we, 20, 21, 5 more years, right? So what is that? It's shaking up. Taurus rules the financial system, okay? Uranus is the planet just of massive change and transformation. Anything it touches just like, so it's a huge shakeup in our financial system and how we see value is happening in this 7-year period. Pluto, which has been in Capricorn since 2008, like I said, Pluto is the planet of death and rebirth, right? When it touches stuff, it makes it, it's tough going, put it that way. But it also is good, right? Because maybe we need the transformation, maybe we need the shaking up. So it was really also focused in our institutions and financial systems in Capricorn, both Earth planets, by the way. Now it's going to transition in 2023. So some astrologers who focus on money, I'm not one of them, but I just found this to be a really interesting little tidbit I picked up. And I'm going to tell you where you can go and watch this girl's, she has a webinar on it. And if you want to get into it more, you can go watch hers, which is interesting. But basically what has happened is, like I said, you have all those major planets, sociological planets have already moved into Aquarius. Okay. They've moved in. Now we're seeing just massive more stuff is all online. And then Pluto is the next like big planet. And it's going to move into Aquarius in 2023. And it's going to be there for the next 20 years. So basically what they're saying is like Bitcoin and some of these, they all have strong planets in their astrological charts, which you can watch on something else in Aquarius. So like right now you're having the adoption of that is going much faster. And what they're saying is that when Pluto moves into Aquarius, it's really going to be just massive, kind of game over, right? Another interesting thing that I didn't realize is that right now we are in America itself, the United States is in what's called its Pluto return. So when a planet returns to the original place where it was when you were born, it's usually a big deal, okay? Can cause a lot of upheaval in your life. So Pluto moves very slowly. And so it has returned, it's like the 200-year cycle of America right now is happening, okay? And it stays in the sign, like I said, for 20 years, it can stay in this thing. But what's happening is kind of a redefining of our country and our government and all of this. So make sure that you are involved in that process, okay? It's interesting how you can see this stuff happening on a macro level. At least I find it kind of fascinating and fun. So anyway, that is that. Let me see if we have any questions on that. Love that song. Okay. Okay. So let's say you had some Dogecoin on Robinhood, you sell it for a little profit and reinvest on the same platform into GameStop. Is that a taxable event? I thought Robinhood was for buying stocks. Can you use Robinhood to buy crypto as well? But regardless, even if it was just a stock, if you buy it on Robinhood and you sell it for a profit and then you reinvest it, yes, that profit you got is taxable. Okay. Even if it's on the same platform. Yes, that is a taxable event, which is why I recommended that we, right, it might just be a stock, yeah. But whether it's a stock or a coin, it would still be a taxable event. So just so you know, just keeping it on the same platform doesn't change anything. Only if you put it in a tax advantaged account like a retirement account, then you don't have to calculate that. Okay, slow clap. Woohoo! All right, we did it. Just in almost exactly 2 hours. Hey everybody, how are you doing? Okay, so the most important point I want to say is educate yourself. There is so much great information out there. Don't take my word for it. Go get yourself educated. And the more you dig into this, people are creating great, like simplified content. And the more you dig into this, the more you're going to learn. There's some great resources out there. I mean, you can just go to bitcoin.com. You can go to blockchain.com and, just start reading about their stuff. You can go on YouTube and people will tell you stuff. This is a YouTube influencer that some crypto people recommended. They said his videos are really good to learn about this stuff. Some people who are deep into crypto. So that's one place you can go. Like I said, Bitcoin page. And if you want to dig more into that astrology stuff, she did one webinar that's live, publicly live, and that is that's the website. That's the link for it. If you want, I could probably copy it into the chat. Someone says I highly recommend Andrei Jik too. So that's spelled Jihk. Andrei Jik. Okay, so that's someone else that you might check out as well. Okay, but there's so much great information out there. All right, so someone's saying I'm going to jump off. Kids, dinner time. Great presentation. Looking forward to catching the replay. Yeah, I mean, this is so much information I have dumped here. So, but like I said, I wanted to get it to you. You can slow down, watch it, pause it, go back, do whatever you need to do. Just wanted you to have what you need so that you feel like you can go and get started. All right. You don't need all this information to get started. All you need to do is open an account and, whatever it is, $100, just put it in there and do something so that you're not left behind, because you have no idea how far that could go in the future. Okay. Thank you. It says excellent. Thank you so much. Yeah, this was really superb. Thank you. Thank you guys so much. Excellent. Thank you so much. Thank you. Yeah, so I hope this gave you guys a lot of value, and thank you from Anthony too. Autumn, I hope this gave you guys a lot of value and that you can use these tools, and at least just gives you like the window to start seeing it from. And then like now when you go and you start reading stuff and you start researching stuff, you'll have a framework to put all that information into, okay? And you'll have a framework to start to understand it, to see it at a much more macro level than just like hearing little bits and pieces here and there that's just all disjointed, okay? John D says, thank you so much. Thank you, Faith. Amazing. Thank you. Thank you, Farida. Thank you, Tony. Thank you, everyone, for coming on. So good to see you all. Okay, so if anybody has any more questions, that you want me to answer, you can do that now. Otherwise, I'm going to stop the recording and I'm going to say happy crypto, right? Let's stop the share. And yeah, all right. Well, I wish you guys all amazing crypto world and crypto investing. Okay. Remember to go out there and educate yourself. Don't take somebody's word for it. Study it.
But who is policing all this? Who elected the miners? Who elected the people who are certifying the transactions?
Great question. Okay. So the whole point is that nobody is. Right? That is the point. Okay. Nobody elected the miners. If you want to be a miner, you can go buy the equipment. You have to buy like super high powered computing system, etc. And you still get figured out and you just link it all up and you can be a miner. Like nobody controls that. You can do that. The whole point of this is not to have a centralized system. Now, the point is that it doesn't need to be policed. So why would we need to police something? Okay. If we police something in contracts where if I say, I'm going to buy this house from you. Okay. And here's my down payment on the house. And, you need to give me the title deed, right? We need someone to police that transaction. What does that happen? When I did it, you put the money into escrow, you put the title into escrow. That's a third party sitting there. Okay.
Mhm.
And then when we make that exchange, we're like, okay, I put the money in, the title's in, sign the agreement, shake hands. We're executing now. Then the escrow agent goes and makes sure that I get the title and make sure the other person gets the money. Right? So the point of this whole technology is that you don't need that anymore. Okay. Because it's written into the smart contract that says as soon as this amount of money has been transferred into this and this object or this title or this whatever thing has been transferred into this, it automatically just does it. You can't stop it. Once the conditions have been fulfilled, the transaction is automatically executed. See? So you don't need that policing person. You've both agreed, I'm going to exchange this much Bitcoin for this much money. Boom, it happens as soon as you press go, right? The contract executes itself. That's
But
the software.
But I thought you said that they have to certify the transaction. That there are people who certified it to be sure that it's legal or to not legal, but I mean that it actually took care the exchange or.
So what they're doing is they have a bunch of people independently confirming the transaction. So they're running different they have to figure out these complicated software puzzles to confirm the transaction. And to be fair, I don't really know how that works. But once they figure out that software and the transaction is confirmed, so they're not doing anything with the transaction. They're just confirming that that transaction existed and that happened accurately, and then it gets recorded in the blockchain, in the ledger. But they don't control anything about that. They're just confirming that it took place and that this is exactly what happened. And it's diversified. You have multiple people doing that.
Can I be one of them if I want to?
You can be. But it's the issue with it right now, okay, is that it's gotten harder and harder to run these algorithms. More and more time consuming, more and more computing power, right? As it's just kind of grown exponentially, they become far more complicated. So they've developed literally special computers that do this. And you have to buy them. These computers are very expensive and they run them and they use a huge amount of electricity, right? So that's why this becomes not so sustainable after a while. And unless people have whole farms doing this, I guess. Right?
Yes.
It becomes like you can go look into it, but for most average people, it's just not,
possible.
The speed of the transaction, like the fastest person to figure it out, right? They're the one that gets it. So if your computer is slower, you're just not going to be able to compete, right?
Right.
So that's how it works, especially with Bitcoin. It might be a little different with some of the other cryptocurrencies. Might be easier to do it, but with Bitcoin, it's like, yeah, it's a whole thing. Some cryptos are built to be AIC resistant, so you can still CPU and GPU mine. Okay, so some cryptos are built so that miners and stakers get to vote on protocols. Right. So it depends, right? Like Bitcoin was built in one particular way, but all of these different currencies, they're coming up with their own rules. So you got to understand those rules. So some of them have protocols where the software is such that, you know, if all these different and a higher percentage vote on a particular thing, then they can change the trajectory, then do something else with it. So they're not all built the same as Bitcoin, right? They're all built a little bit different, which is why you have to research them and understand what they do, right? So like Bitcoin, for instance, only has a set amount, 21 million, that's all there ever is. Most of the other currencies are not like that. They can keep creating more of them, right? But they're not meant to be used for what Bitcoin is used for, which is to hold value. They're meant to be used to transact on the internet, right? So they have a different protocol. They're built with different features. So a lot of these are ones that you can split and you can keep making more of. So you have to understand that that's a totally different way it works. I have yet to test them myself, but I plan on testing out a few since I have a decent graphics card. Read, and then read some more. Yes, yeah. And you know what? If you can get a hold of people, I don't know if you're in Clubhouse or something, but if you really are interested in this, then get a hold of people that are doing it. There are miners that are on there, okay? You go and sit in these crypto groups, you can ask them questions and they will tell you. So yeah, if you are really interested in doing this, go talk to people that are actually doing it, okay? Yes, you can read for sure, but go talk to people that are doing it and get the information. Yeah, you can rent out other miners' equipment. Exactly. There's a large crypto clubhouse going on right now in Clubhouse. Yeah, they're going on all the time, frankly. And I got some great information just going and hanging out in one of those crypto clubhouses about like what are the platforms that they're using and what are some of the concerns and worries. So now that you guys have a basis, you can go get into those conversations and learn more. Okay. All right. Woo.
I know you're tired probably. Can I ask some question? Let's say the people don't have to buy right now, it's Bitcoin 50,000, right? And it's keep growing. So what would you recommend to buy like cheaper, not 50,000?
So this is what you need to understand about buying Bitcoin. You can buy just a routine fraction of it. You can put in $100 and you will own a percentage of a Bitcoin, right? Just like you don't have to buy a whole, you know, like $100 bill or whatever, right? You can, so you still get to hold that value. You still get to be an owner, even if all you could afford to put in is $100, right? Still buy Bitcoin and you can still be part of the future upside of Bitcoin. Even if you don't have to have 50,000. I didn't buy in at 50,000, right? You know, you can buy 2 percentage points of a Bitcoin and you still hold the value. And as that goes up, it goes up, right? That's all there is to it.
Yeah. So you mentioned, I forgot the website, way to register. You mentioned it. Where, can you repeat that website?
Yes, but when I post this, go back to the beginning of the website of this webinar and watch it because I've got all the different ones on the slides back at the beginning. Okay.
Okay.
So a lot of people use Coinbase, which there are some issues with it, but that's probably the biggest one that people use right now. Gemini is another one. Yeah. So there's so many out there, honestly, but there's a few that seem to be just kind of the ones that more people are using. But you know, go back and rewatch from the beginning because that's all that information about how do you.
Okay. Yes, I will.
All that stuff. Okay. I gave you all the info at the beginning. So
yes, thank you, Faith. Thank you so much.
What she's talking about.
Yeah, we go.
Okay. All right. Okay. I think it's time to stop. Hope I've given you guys enough information that you can go get involved and be part of this. And, remember, it is like anything, there's always a risk. For me personally, now that all these big institutions are getting into it, to me, it feels less risky. But, remember, any type of thing like this, just, never put in what you
Just say
can't afford to
something.
lose, right? So,
Okay, yeah.
There was,
you
I
don't
just want,
necessarily want to miss out.
I just want to mention that this morning at the stock market, they were talking about a conference that they have, I think, believe yesterday about the Bitcoin, and that it's going to be worth several trillion of dollars. That's what it's going to come up to, their value.
Yeah, so there is, right now, the whole market cap for Bitcoin is already nearly at $1 trillion. So for sure, it's going to go way beyond that. Individual coins, like I said, people are predicting it could go to 100,000 by the end of this year, which means it'd be doubling in value.
Mhm.
It's been going up by about 200% a year. I don't know anything else that
That's going.
goes like that, right? So, and then once it's all mined, right, then once way more people adopt it, what's going to be the future there? People are saying it could, go into the hundreds of thousands or $1 million per Bitcoin. Who knows? I don't know. I can't say, but even if you put in $500, you don't really want to miss out on what is, potentially the future of our monetary system, right?
Yes.
Don't educate yourself. So that's kind of the way I see it. That's how I'm doing it, but you got to do what's right for you and make sure you get educated. All right.
All right. Thank you.
Okay, everybody. Great to see you all, and have a wonderful evening.
Yes, you too. Thank you so much.